I'm Joe Galvin, Chief Research Officer for Vistage. It's my pleasure to host the latest webinar in our Peak Performer webinar series. The series is designed to support your leadership climb by bringing the most trusted experts to the Vistage community who provide exceptional insight and best practices to help you navigate new challenges and possibilities. Uncertainty remains the top CEO challenge as we close out 2025 and begin to think about 2026. And that has made strategic planning even more challenging. Understanding the key business trends shaping 2026 are essential to developing your assumptions of the world as you assess the internal factors impacting your business. To gain an expert perspective on those business trends for 2026, we've invited our friend Marc Emmer, who's a 20-year Vistage member from Los Angeles, an outstanding Vistage speaker, and a great contributor to our research center. Marc is president of Optimize Inc., a management consulting firm specialized in strategic planning, and the founder of Market Trends, AI. Marc has consulted for nearly 200 organizations, including Starbucks, CBRE, and over 80 Vistage companies. Marc is one of the top strategy speakers on the Vistage circuit, has written 2 books, and as I said, a regular contributor to the Vistage Research Center, Forbes, and Inc.com. Marc's annual trend series, which was just published and is available on the Research Center, is among our most consumed content as Vistage members prepare for the year ahead. It's my pleasure to welcome back Marc Emmer. Marc, thank you for coming back. Thank you for sharing your insights. I can't wait to get started.
Thank you, Joe. Hello, everyone. I'd like to wish you all a very happy Friday morning, wherever you might be. Today, we will separate the hype from the headlines and share actionable insights that Vistage members can utilize as they're adapting to new technology, attracting top-tier talent, and maintaining their competitive advantage. So today, I will unpack the economic, technological, social, and geopolitical forces that will shape what will come next. So get your popcorn ready. We have a lot of content to cover in a short amount of time. As I think of 2026 and beyond, I'm reminded of one of those glorious Florida sunrises. There are some stormy clouds overhead, but there is also the promise of the new day. So there is the noise of the government shutdown and tariffs and stagflation, but there is also the promise of artificial intelligence, which is a force multiplier unlike anything we have ever seen. And for that reason, we're going to start this morning with technology trends. And I'd like to share some kind of macro forces before we dive in to how Vistage members can actually apply AI tools to their businesses. I think you could bifurcate our economy into the AI revolution and everything else. The hyperscaler companies like Amazon and Google this year alone will spend over $300 billion just building data centers. That represents 1% of GDP. And if it were not for that build out, our GDP would not be growing at all. For purposes of comparison, we spend about $500 billion on all infrastructure, including building out roads and bridges. So there are entire sectors of our economy, including construction, that are migrating to the AI build out. Led by NVIDIA. Yes.
Pardon me for interrupting, but we can't see your slides.
Okay, well then Tessa's going to have to help with that.
I see them.
Okay, it's me then. Go ahead. Sorry.
Oh, okay. Tessa, you think we're good?
Yes, I'm in an attendee view, so I can see as well.
Okay, great. Awesome. So we will, so we will continue. So led by NVIDIA, a company that few of us had even heard of 3 years ago, the Magnificent Seven now represents a staggering 30% of the S&P's 500. And today, US tech titans represent 8 of the 10 most valuable companies in the world. You could think of the AI build out coming in 3 forms. There are the chip makers, there are those that are consuming the chips, and then there is everybody else who are commercializing applications and various support technologies. Some people believe that AI is a bubble because of the circularity problem that we have in Silicon Valley, in that OpenAI, NVIDIA, Oracle, Google, AMD, and others have made investments in one another, and every time they do that, all of their stock prices go up. And so we will need about $2 trillion in value creation just for our economy to justify the investments that have already been made. And, we may be seeing the bubble bursting already over here the last couple of days, but just because we see a correction, that does not in any way suggest that the underlying technology is not game changing. The last time we had an event like this was during the internet revolution, when gains in productivity tripled and the value of the stock market went up 250% in just 5 years, which is just a proof positive that we only need minor improvements in productivity to yield tremendous economic value. AI may also be the source of our competitive advantage in our rivalry with China. 73% of advanced AI models are being built in the US and only 15% in China. So it is AI that can propel the US back into global dominance and potentially thwart China's efforts to challenge the US as the largest economy in the world. However, over the last year, I've spoken to over 500 Vistage members about their adoption of AI. And I would suggest that our adoption as a community is very, very slow. Recent studies suggest that half of small and medium-sized businesses are only experimenting, and usually with only one or two large language models, and for any advanced functionality, usually only in one or two departments. Further evidence of our slow adoption is that according to OpenAI, only 3% of their users are paying for a subscription, even though it is the paid subscription that unlocks many of the technology's most important features. But notably, the small and medium-sized companies that are investing in AI are the ones who are growing the fastest. There is overwhelming evidence that the companies who've actually figured out how to use AI are getting a significant return on their investment. For example, some of the earliest adopters of AI have been in marketing. And marketers are reporting that when leveraging AI tools, they have improved productivity, higher client satisfaction, and they are spending less money on marketing. But perhaps most notable is that they are outperforming their markets by 3%, which is an extraordinary number. So here is the concern that I have for the Vistage membership. What I've heard from all of you is you want tools that you can deploy right away that will transform your business forever and that are free. And I would suggest that that is an unrealistic expectation. Large language models are becoming table stakes, which is why I'm not going to spend a lot of time on them today. The next frontier for most of us will be agents, and I think it's unfair to compare ourselves with large tech companies who are implementing digital core. Digital core means they've automated their entire work product end to end in a way that is entirely automated. And it is for that reason that I think our focal point should be on agents. I know you're hearing that term a lot, so let me break them down for you. Think of an agent as an assistant that could completely automate a process end to end without the need of a human interaction. Say you were trying to use an agent for employee onboarding. In the past, your HR generalist would have to gather the application and all the relevant documents and schedule the onboarding meeting and order all the computers. Today, an agent could do all of those disparate steps and then deliver everything back in a bow to the HR generalist. Note you still need the HR generalist, but the speed by which that process would take place would be dramatically accelerated. On this screen are examples of entire workflows that could be automated with the use of an agent. So here's what I want to share with you this morning about AI. Instead of coming to work every day and doing your things, I recommend you come to work every day and try to figure out how to get AI to do your things. Now, as we deploy agents, there will be an evolution. In the beginning, they will act like a chatbot and just automate various tasks. Then they will get smarter to the point that they can retrieve information and help you make decisions, and they will start to demonstrate judgment. But ultimately, the real value of agents will be when they can talk to one another. So imagine you've deployed your employee onboarding agent, and now that agent can talk to the job training and development agent. Then you really have something that is extremely powerful. And we will gain more and more access to agents. ChatGPT is actually embedded agent mode right into their interface. But honestly, this is just for kind of ordering shoes and managing your travel and that type of thing. I think if the Vistage membership is really going to take advantage of the transformative power of AI, that is going to require much more investment than we are accustomed to. Some of the largest segments in Vistage, such as construction and manufacturing, have traditionally only spent 2 or 3% of revenue on IT, even though those are the same sectors that may be spending 20 to 30% of revenue on direct labor. So in my mind, it is a good trade-off to outspend your industry benchmark by 1 or 2% so that you could reduce your reliance on labor. It's also, I think, a very important narrative with our employees, and I believe it will be true, that when we leverage AI, it will be to accelerate productivity and reduce our reliance on labor, but not to cut jobs. And in the short term, for using things like agents, you're probably going to have to outsource that work anyway, because your typical Vistage technology team doesn't have the capability to deploy agents just yet. One of the ways you will get an almost immediate return on your investment is through improved information flow, which I would suggest is a chronic problem within most Vistage member companies. Today, knowledge workers spend about 25% of their time just looking for information. So one of the first technologies that many of you will implement within kind of this AI universe will be retrieval augmentation generation technologies, or RAGs for short. A RAG is a technology that will allow you to run a query within your own internal systems, similar to a large language model. Say you're a CEO and you wanted to know how profitable your last 3 product releases were and what raw materials you used and where you sourced them from. You might have to look in 4 or 5 disparate systems. You might have to ask 3 or 4 executives to get involved, and it could take you a week to answer these questions. But in a RAG, you'll just be able to run a query, and that will probably end up in something like Microsoft Copilot that is secured within your ecosystem, and you'll use something like ChatGPT to do searches for things that are outside your ecosystem. Now, here are some of the technologies that I would say are already being integrated within the Vistage community that are AI enabled. In addition to ChatGPT, I would say the most popular large language models are Claude, Notebook LM, and Perplexity. And one thing that's becoming common in these AI solutions is they are specializing. So for example, if you're using complex legal documents, Perplexity might be the best tool to use. So we will use different large language models and different tools based on the situation. Napkin is a very nifty text-to-visual editor. So you type in words, you get a graphic back, like for use in a PowerPoint presentation. They have a free version. I think the precursor to RAGs will be knowledge bases. One of the tools members are using is Notion. So instead of looking for an SOP by going into some stodgy document management system where nobody can find anything, in the future, you will have something that will act more like the internet, and you will organize all your documents there. I think many of the marketing automations and the chatbots have already been deployed in the Vistage community. Another thing that I think you'll all be using AI for very soon will be predictive modeling in the form of trying to do more modeling within your marketplace and also financial modeling. And if you want to monitor your competitive environment in real time, take a look at Market Trends AI with only one T. That's markettrends.ai. And Spirit of Transparency, that is a product that I have helped co-develop. But getting back to the agents that we talked about earlier and automating entire workflows, for example, if you wanted to completely automate a workflow end to end, like your client onboarding, you may rent something like Rocket Lane that might cost a few $100s a month in the interim until you can develop agents on your own. So, if you're one of those people who's just intimidated by AI and you're not alone and you don't even know where to start, here's where I would start. Obviously, AI has to be part of your strategic plan, but you probably need to build a protocol for how you'll use AI within your company. But then it really comes down to ensuring that there's AI literacy for all. So making sure there's plenty of tools you can use, like Google and LinkedIn have free resources, but you need to make sure you have something like a training plan for each department on how they will use AI. And I think it's really important that you assign a champion, even if that's just to use large language models. You have that person who can be the trainer within your organization. And of course, establishing KPIs so that you can measure the impact of the work that you are doing within artificial intelligence. However, in my mind, the AI that has already been most adopted in our economy today comes in the form of autonomous vehicles. It has become a three-horse race between Waymo, which is Google, Zook, a division of Amazon, and of course, Tesla. I recently had a chance to sample Tesla's most recent full self-driving capability, and it is really, really impressive. I believe that many more people than the population realizes are going to be in autonomous vehicles very soon. Tesla's also about to unveil their robo-taxis and set them into the wild within the next year or so, if local governments will allow them to do that. Now, this contraption you're looking at on the screen is a Zook, which is ferrying around the patrons in Las Vegas, and they will soon be expanding into other markets throughout the US, just proving that not everything that happens in Vegas necessarily stays in Vegas. We're moving towards more commercialization of other autonomous vehicles, from tractors to geofenced delivery vehicles and last mile delivery drones. So I believe the commercial deployment of autonomous vehicles will be a boon to our economy over the next decade or so. Last year, we brought you the Tesla humanoid robot. Now they've seen a lot of competition. This is the Figure 3, which is freakishly human-like looking and has such dexterity, it can actually fold your laundry. So I think we'll be seeing these robots deployed in hospitality and elsewhere very soon. You can also adopt yourself a robot dog for $74,000. Companies are using them for things like inspecting vehicles and deliveries. And similar to the Figure 3, there is no evidence that the robot dog will provide you any meaningful companionship after a long day at the office. Use of digital twin technology is up 38% this year. Digital twins promote all types of simulations and dramatically accelerate product development. So organizations are using it, such as utilities are trying to mirror various weather patterns. Retailers are creating mock-ups of their stores and inviting their vendors to participate. So digital twins allow us to simulate all types of things that are happening in our physical world. Some other technology to be aware of: we're seeing broader adoption of blockchain, and that is not only in finance. We're seeing more tokenization in the supply chain, for example, and we are moving towards a period of hyperconnectivity as we shift from 5G to 6G, and Starlink has deployed 6,000 satellites, transforming commercial connectivity for high-speed internet remote sites where fiber and cellular coverage might be sparse. So companies are using satellites for things like real-time data, video, and redundancy. And I think Starlink could be a real cog in the wheel as the US enters the space war with China. And just as importantly, we'll see Starlink retrofitted in all kinds of vehicles. So sometime soon, we may actually get some work done on an airplane. Much has been made of the AI drain on the energy grid. Data center power requirements are expected to double by 2030, and the total demand for energy to swell by 40% in the next 10 years. And you don't have to be a tech titan to secure your access to reliable, affordable power. Private companies are signing long-term power purchase agreements and installing solar so that they can stabilize their future cost structure. And has been widely reported, the hyperscalers are now developing their own energy infrastructure, including nuclear microreactors. And in doing so, AI now is like the largest vertical integration in the history of our economy. And I think that there is a lesson for private companies, and that is all of us should be looking to participate in more affinities and alliances. An example I like to use is, say, even a big public company like American Airlines, if they want to expand their routes and offer passengers access to Europe, they don't deploy their own capital. They find a partner like British Airways, which is a far more efficient use of their capital and also expands their value proposition. And I think in this age of vertical integration, private companies who may not be able to do that very readily should be looking for ways to spread their wings through various affinities and affiliations. So in summary, this is our moment. And what I would tell you is, if you can either invest in AI now or you can compete with it. And so I think it's a function of not only making the right investment in technology, but having the right technologists on your team that can help you to the promised land in terms of your investment around technology. So I encourage the Vistage membership to have a greater urgency in their deployment of AI. And that makes for a timely transition to our economic trends. In his press conferences, Jerome Powell looks like a guy with irritable bowel syndrome. He certainly has some indigestion, and I think it's well kind of illustrated in the dot plot graph, which is published quarterly and represents what Fed governors think their future votes on interest rates will be. And historically, they've been in a very clustered pattern, but what you'll notice in this graphic is they're in a very scattered distribution, which just confirms there could be some dissension in the Fed. And in the future, should there be any kind of contentious fight, that will be very unsettling to our markets. But also, as a reminder, the Fed sets all kinds of monetary policy, not just interest rates. They are currently in an easing posture, meaning that they will be reducing the size of their balance sheet and pushing more liquidity into the system. While I understand that tariffs are top of mind for many of us, and especially our manufacturing members, which are directly impacted by it, I would also say that the press is stoking a lot of tariff hysteria. The last inflation report came out at 3%. And the announcement last week that the US is entering a truce with China should take some of the edge off. But for now, Chinese imports are expected to be down 8% this year, with Mexican imports up 6%. So it is Mexico that is really the winner in the trade war. Now, of all my data points, I think this is one that is really telling. Pay attention to the black line, which is the tariff effective rate. Through the summer, that was well below 10%, and in the fall, it spiked above 18%. During the president's first administration, it took an entire year for tariffs to take effect. And I would suggest to you that we really haven't felt the impact of tariffs yet. That is probably going to happen in Q4 of this year and headed into next year, which is why many economists believe that the US economy will only grow between 1% and 2% in 2026. And we will just see how the administration, the Fed, and our trading partners are able to adapt. The US consumer is really struggling to rebound amid all of this compounding of inflation. You know what they say about inflation? They're kind of like your in-laws. They show up uninvited and they just stay way too long. Amongst the world's economies, India is the hottest economy. So that is why our strained relations with them is a bit troubling, especially as India represents an alternative to China on many US imported goods. But all in all, the global economy is expected to grow 3% next year, slowing as we get closer to the end of the decade. There's also a pretty big variance in sector growth, with technology and professional services leading the way because of AI, and also more compliance, which is becoming a much bigger deal in many industries. But of note, this slide is offered in nominal terms, meaning including inflation, unlike the last slide, which was in real terms, not including inflation. So when you factor in inflation, we realize there are entire sectors of our economy, like agriculture and mining, that are barely growing at all. Another sector in the doldrums is manufacturing. Output has been higher, but the total revenue for the industry is not much higher. So that just is a function of pricing pressure and margin compression, and the focus continues to be on supply chain resiliency within manufacturing. So as much as the president would like companies to reshore, our supply chains are just not set up to do that so readily. Valuation multiples have also been somewhat muted given the constraints on the cost of capital. The average EBITDA multiple for a private equity deal is up to 7.2 this year, slightly higher than last year. Healthcare valuations are swelling given all the capital growing into that market. But I would also say it should be a good couple of years for private equity as high yield credit spreads are coming down, meaning there is more liquidity that is flowing into that market. This is a year when all the asset classes, including crypto, are up, which is quite unusual. That's kind of a testament to AI. But I would say the one that I'm paying attention to is commodities, given all the recent saber rattling with China on rare earth elements. So I think that market will be continue to be unstable, even though both governments are putting a good face on things at the moment. Since 2024, the yield curve has moved steadily upward, recently crossing back into positive territory and is currently just above 0.5. This is a period that economists refer to as uninverting, when investors believe that we will have a soft landing, and it is unlikely that we will have a recession in 2026. Housing sales rose 2% in September, but the conundrum that the Fed is in is we really just haven't recovered from the housing crisis in 2028, and we are 7 million units short of having close to anything like affordable housing, which is why the administration is putting pressure on the Fed to lower rates, even they know that that could spark inflation. We have a lot of problems in our country, but in my mind, this is the existential problem, which is we just do not have population growth, especially amongst young people, to fund the government's future obligations for Social Security and Medicare. At the time Social Security was enacted, the number of workers per retiree was 17 to 1. Today, that is more in the order of 2.8 to 1. And this is the primary stressor on the US deficit. The only thing growing faster than AI is the federal debt. It's now 124% of GDP, higher than Spain or France. The only check for that is the bond market, which acts like a referee, but it's clearly that many bondholders have been skittish over the last year, which would suggest they have concerns about the US government's ability to meet its obligations into the future. So, as I suggested last year, we're in a long-term debt cycle and also a short-term debt cycle. And that is why ITR and so many others have been warning us that the deficit and debt are ballooning to levels that are just unsustainable. Entitlement spending will go up $1 trillion in the next 5 years alone. And this year, interest payments will approach $1 trillion, which is 13% of the budget and more than defense. I want you all to imagine running an enterprise where 13% of your revenue goes out to paying interest. These are the circumstances that we find ourselves in. And one of the problems is that the lawmakers just don't have a lot of outs. Like, many of them like to talk about corporate taxes, but that really comprises a very small percentage of the tax base. The vast majority of taxes are individual income taxes, and the top 5% of wage earners pay 61% of federal income taxes. So please don't shoot the messenger here, but I just don't see any way that in the next number of years, taxes for business owners don't go up drastically in the United States. And that is one of the reasons why we said last year, and I'm going to say it again, if you're a business owner that's considering an exit, I would be looking at the next few years when private equity valuations will be higher, the cost of capital will be lower, and there is the potential for some kind of financial collapse as US federal spending starts to crowd investment. So to summarize the economic trends, we do not expect any kind of downturn next year. However, interest rates will spark higher inflation and tariffs will be a drag on the GDP. So we will just hope that China and the US is able to honor their trade agreement, but I will believe it when I see it. And with that, we will move on to social and workforce trends. We're in a no hire, no fire job market. Since the Great Depression of the 1930s, economists have relied upon the jobs report as the primary bellwether of the health of the US economy. And today, as there's been doubt about the Bureau of Labor Statistics and a government shutdown where there's no reporting at all, that makes trend reporting very, very difficult. But the other thing is that in the past, economists have been able to rely on a growing job market. And really, for the first time in modern history, our job market is not growing anymore. In fact, there is lower labor participation, and that is not a temporary trend. That is more of a permanent trend. So not only do we have far fewer young men in the workforce, we have heightened immigration action, and we have many more workers who are filed for disability on a proportional basis in the past. So our job market is stagnant, and that is one of the reasons why we continue to see members feeling pressure on wages. I just don't buy into this narrative that because we've had 3 or 4 soft job reports, that somehow the employers are now in control. So ADP is still reporting about 4.5% wage inflation overall, with job switchers demanding a slightly higher premium, although that premium is less than it's been any time since the beginning of the pandemic. And also, inflation's not equally distributed across all sectors. There's always been those such as engineering that have had a premium, but even sectors like hospitality today are still having a really hard time finding people, and they're having to pay more. I would also just remind you, many of our lower wage workers are living paycheck to paycheck. The cost of living on the lower end of the pay scale is up 22% since 2020. So our employees are still experiencing something of an inflation hangover. It's not much easier for the employers, though. You will all, on average, have a 9% cost increase next year for healthcare premiums, and it's expected that it will level out at 6.5% after mitigations. Mitigations is a fancy way of saying that you will all likely cut healthcare benefits, but you've been doing that for 4 or 5 years. So at some point, I think business owners need to be concerned about the fact that they might be cutting into tendon and bone. So what we're seeing is companies getting more aggressive with things like health savings accounts and other ways that they can more proactively manage their healthcare benefits. I've been beating this drum for 5 years, which is that employee engagement remains depressed. Gallup reports that only 32% of workers are actively engaged at work and 17% are actively disengaged. So I think we need to keep our eye on the prize. In our surveys, we're hearing three things, which is that employees care about career progression, compensation, and flexibility. But their definition of flexibility is very different than that of their employers. So one thing that we recommend is in those situations where you have remote eligible employees that you keep flexibility as like a non-negotiable perk. Gallup's most recent data suggests that in remote eligible environments, 21% of employees are on site, 51% are hybrid, and 28% are fully remote. The other focal point that I think we should have with employees today is upskilling. So as I mentioned earlier, we need to provide opportunities for our employees to learn how they can deploy AI and truly become more productive so that they can deliver more value than ever before. Turning our attention to the consumer, Wall Street doesn't always convert to Main Street. After years of inflation and economic shocks, Americans are tightening their belts. 83% of Americans are reporting that saving money is a bigger priority, and a shocking 81% of them specifically are saving money on food. And consumers are increasingly expecting near instant results, whether it be through delivery service or digital responses. So AI is enabling all types of personalization, which is coming in the form of hyper-contextual product recommendations and adaptive marketing. I also remind you, we're in an age of hyperconnection but emotional distance, surrounded by notifications, yet we are all starved to have real conversations. As a result, we have a society that is wealthier and more efficient than ever, but also lonelier, angrier, and less fulfilled. So mental health remains a very, very big deal. And I think as marketers and employers, we need to remain focused on the fact that many of our employees are feeling disconnected. But I would also say if you need a lift to your spirits, probably the most important trend in 25 headed into 26 is, yes, Taylor Swift and Travis Kelce are getting married. No word yet, Joe, if we've been invited to the wedding. All right, to summarize, we will be turning to AI to slow the pace of hiring, but we should also be preserving our culture and improving engagement in such a way that our employees can leverage AI so they can contribute more than ever before. And we should be promoting AI literacy in a way that will continue to engage our employees in the AI revolution. And with that, I will move on and end with geopolitical risks. We are in a G0 world absent of one country leading in a way that we did at the time that we formed NATO and the United Nations. Our strategic rivalry with China intensifies, but the focus has moved towards semiconductors, AI, and certainly our presence in the South China Sea. And what I would say is that that is really dictating to companies how they're going about managing their supply chains. There's been a lot of fragmentation in Europe because of the Ukraine fatigue. And as a result of that, there are a lot of political shifts in Poland, France, and Germany, where there are signals of a growing resistance there. There is also unrest in Africa and South America, which is unsettling to the markets. But I'm sure many of you would say that perhaps our biggest geopolitical risk is infighting at home. And here in the Trend Series, we don't really get into the politics, but I'll just say this. If our economy were to have an extended bout of stagflation, which I think is likely to be the case, that is only going to create more separation between the haves and the have-nots. So here are some things that I would encourage you to think about in 2026 and beyond. Invest in IT talent, maybe outspend your industry benchmark by 1 or 2%. Include AI in your strategic plan and focus on building agents to manage workflows. And instead of coming to work every day to do your things, train AI to do your things. Ensure that you have good data integrity that will enable your use of agents and upskill your workers. If you're shipping physical goods, it's really important you're measuring things in units because we know inflation will magnify our compound annual growth rate. Consider vertical integration, and if you don't think you can do that, then more affinitys and alliances, more flexible work and pricing arrangements, I should say. You may not be able to pull off something like dynamic pricing, but you can make your pricing more adaptable in this volatile environment. And that might also consider signing some long-range energy agreements. And I'm a strategy facilitator, so I can't help myself. But it's important that we think about strategy like it's a cycle and not an event. We can't just download forms from the internet. We have to continue to work our strategic plan. We can't just set it and forget it. And focus on profitable growth next year and prepare for your exit in 2027 to 2030 or so. I will leave you with some resources. I have provided a masterclass on our YouTube channel. We also have an excellent blog on trends and on strategy that you can find at the strategy page. We also offer free consultations to any Vistage member on strategy or on AI. And I will leave you with this. As divided as we might seem as a nation, the world still watches America with envy and hope. Our political noise can drown out our biggest strength, which is our relentless drive to reinvent. And right now, Vistage members have the opportunity to redefine their industries and drive economic value. So one more time, if you don't invest in AI now, you will be competing with it in the future. I wish you all a very healthy and prosperous 2026. Thank you, Joe. I'm happy to take any questions.
Marc, thank you so much. Your presentation, we've got loads of questions and a lot of different areas I want to explore with you, but I want to thank you for the effort and the energy you put into compiling this and distilling it and then sharing it with our community. So thank you so much for what you do. And before we get into this, you didn't get the invitation? I mean, I got mine like 2 weeks ago, right?
I'll see you there.
Maybe you're on the C list. Anyway,
Yeah.
before we get in, let's get into things that really matter, and that is you lay out this composite view across technology, across AI, economic issues, workplace issues. How do CEOs take all that information and now incorporate that as a base from which to do strategic planning? You're a strategic planning expert. You work with so many of our members on that. How do you now take this external view of the world and incorporate it or embed it into what you're doing with your strategic plan as we're starting to look ahead to next year?
Well, thanks for the question, Joe. I've done strategic planning with about 100 Vistage members, and what I can tell you is it is getting very, very difficult these days to get anyone's attention, right? Everyone is very distracted by, all of the notifications. It's the pace of change, and it's the pace that we're working at. So a trap that companies are falling into is they're thinking about things quarter to quarter. So I think, it's a matter of having better information and looking at it more often. So we need to be building tools out where we can monitor our environment in real time, but it means we need to be doing strategic planning more, not less, right? So that we can adapt in a world that's become quite chaotic.
Well, you spoke at length about the impact and all the different places where AI is going to come into place. And you said you work with our CEOs in strategic planning. Do you see people embedding AI into their strategic plan? Are they weaving it into everything that they do? And if not, how do you see CEOs begin to incorporate AI into their strategic planning?
Yeah, AI has to be part of your strategic plan, and not just tactically how are you going to use it every day to be more productive, but I would start with having a real conversation about what level of investment are you willing to make. I mean, are you just going to dabble, which is what most of us are doing today, table stakes, or are you going to invest, which is going to require more investment in technology than most members are accustomed to making?
So the challenge will be going forward is we didn't have to deal with AI 3 years ago, right? It was
Right,
just 2 years we knew. But in three
right.
years, it's going to have such a radical impact. How do we incorporate that as you think about strategic planning? That's what I'm trying to get to. And what I'm learning is that everyone's not really sure how to approach it. That we haven't had a change agent like this before. So I'd love to get your thoughts on how you grapple with this change.
Well, like for example, I would say let's look at the typical Vistage IT department. They might have a director, they might have a VP, they probably don't have a CIO. They probably don't employ any data scientists. They probably don't employ any applications engineers or cloud edge engineers. So they just haven't built the infrastructure that's going to be required if they want to build out tools like agents. So that's why I think it really starts with, are you willing to make a commitment? And you may feel that you need to get an offsetting return in the form of lower direct labor. And I buy that. But you can't have one without the other. So I really think that a lot of Vistage members have to have a really serious conversation about what level of investment are they really willing to make.
Well, you've made the point about the importance of this investment, increasing this investment. You also made the point about AI literacy and what CEOs need to do or think about they need to do to empower individuals to use this technology. Elaborate on why that's important and what that will take in an organization to let people explore and experiment and innovate with what Gen AI can do.
Well, when we know when people are afraid of things, they just kind of ignore them, right? So I think within any organization, you'd have that bell curve. You'd have some people who've become pretty savvy in AI and they're trying to convince the others. And usually the CEOs are certainly coming along on that. And then you would have the vast majority of employees who are kind of indifferent to it, or they're, having ChatGPT write their emails. And then you have other people that won't even try AI at all. So I think we need to lift all boats, right? But it's very, very important that we make a transition as a community from just dabbling with the large language models to finding actual automations that can lift productivity, because it's going to become a form of competitive advantage.
Mark, I could sit here and engage with you on AI for the rest of the day, but we've got a whole list of questions and other topics I want to get to.
Okay.
And if we have time at the end, we'll come back and dig in some more. Economy is top of mind. Uncertainty remains the top issue for our CEOs. And this has been a volatile year as we've experienced since COVID. Um, so questions are, given your forecast for 2026 and beyond, what are early warning indicators should small and mid-sized businesses track to know whether they're falling behind in adaptability and what investments matter the most to stay ahead? So what should we be looking at to see where this economy is going and how does that impact our investments?
Well, it's the answer to any business in business, Joe. It all depends, right? So I love the question, but I'm also going to hedge a little because every Vistage member should have external demand KPIs that they are tracking. And there are external KPIs for any business. They're just different for every business, right? So it's hard for me to answer that question in a generic way. So the way I'll answer it is make an effort to build out a set of KPIs that track with external demand, which is typically not what companies do, right? Most of their scorecards are completely internal. So I encourage every member to go through the effort to do that.
Staying on the topic of the economy, tariffs remain a top issue. I'm not going to ask you to predict what's going to happen with tariffs. But what are some of the best practices that you have seen, or what are some of the strategies that folks are using to deal with this impact? And to follow on your point that in prior years, tariffs took a year to take place, we'll start seeing them later this year, end of this year, which is we're at now, and into next year. How will we know, and how will we be able to attribute it to tariffs that that's the issue versus the media hype? Long question, sorry.
No problem. Vistage members come in all forms, right? We have many of you are shipping physical goods, some of you in technology, some are you in services. So, it really depends on the industry you're in. But as a general statement, what I would say is you can't find yourself in a position where your inputs are variable and your outputs are fixed, right? So the trap that many Vistage members have found themselves in the pandemic and the supply chain shortage, even in the labor wars now with tariffs, is they have fixed prices out to their customers and their inputs are volatile. So we have to move towards something closer to dynamic pricing where we can control our pricing based on what our cost inputs are. And so this has been a really big problem. And just a lot of Vistage members will tell me, well, I could never implement dynamic pricing the way maybe a retailer or restaurant could. And I buy that. But we have to find ways that we can adapt so that we're in a better position to preserve our profitability regardless of whatever the market should bear.
Right. So we get back to tariffs and their impact coming on later on the year. What will we see? Is that going to show up first to consumers? Is that going to show up in another wave of price increases? Are we just on a steady stairway to inflation?
Yes. I think all of those things, and to your point, unpredictable, right? Because the winds are blowing in a different direction every day. So, I wouldn't necessarily believe what I hear in the press. What I would be doing is planning on every contingency. What if? What if tariffs are what they are? What if they're 10% lower? What if they're 30% higher? Most companies in the Vistage membership who are in, say, manufacturing and are really subject to a lot of variability with raw materials, they've already gone about reconstructing their supply chain and they're trying to reshore and they're moving to Mexico. So, I don't have like a really convenient answer to that. But what I would say is that it's a box of chocolates. I don't think any of us have any idea what tariffs are going to look like in 3 or 6 or 9 months.
Yeah, that's so true. Let's stay with one more question in the economy lane, economic lane. You had mentioned that it's the PE firms are flush with cash. The environment is good. They're going to be active. So for those Vistage CEOs who are thinking about maybe taking advantage of this, what do they do to need to do to get ready? But more importantly, the majority of folks who aren't thinking about it, but will get a phone call from a private equity investor looking to take their business. How should people be positioning themselves to get started should this event be something that play to their favor now as we wait for 2030?
Well, every Vistage CEO listening to this who has a formidable business, their phone's already ringing every week. They're accustomed to that. And I think they're also accustomed to hearing the answer I'm going to give, which is the things you want to do for a successful exit are the same things you want to do to run a successful business, right? You need to be a market leader. And that might not be the largest in your market, but you're a need to have company in your market sector. And you have steady flash cash flow and a solid balance sheet, and you have a good management team. And you are developing things like AI tools. I think that's maybe a difference in an answer I would have given you a year ago, right? Is obviously if you're able to implement AI and improve your productivity, you're going to have a more valuable company, and the private equity firms are going to have an interest in that. So I think the answer to the question is just do all the very same things that you would do to run a successful enterprise.
Right. All right, let me shift into the workforce issues if we can for a minute before I get your
Yeah.
closing thoughts on things. You talked about the engagement and disengagement and how that gap is growing. Why is that important now, and what should CEOs be doing to address that issue if it's impacting them? Because, like you said, everyone's got some of the three varieties, right?
Yeah, I have a unique perspective on this, and it may not be popular. And that is, I personally believe, and our firm does a lot of employee engagement work, so I think I've seen it firsthand with the management teams we work with and their employees. But I think a lot of employers have just paid lip service to this whole flexible work arrangement thing. There are segments of our society that would prefer to work at home, and there are others that prefer to work in an office. And now there is a majority that is kind of in between those two things. But all people want the flexibility to be the best version of themselves. And I think that if employers do not recognize the individual needs of employees, we will continue to have depressed employee engagement. The other thing that I'm finding, and this is like Groundhog Day for me, I'm repeating myself over and over again with our clients, is one of the things coming out of COVID is your corporate communications are much more important than they've been in the past. People are distributed, right? So we have to constantly be communicating, and you can't tell your employees something one or two times. You may have to tell them 7 times and realize they're all going to absorb that information through different modalities in different ways. So every Vistage member needs to have an effort or a department or a champion for corporate communications to make sure that our dispersed employees are kind of coming along for the ride.
Well, Mark, thank you so much for all your insights. Last chance. What are your final closing thoughts for us going into 26? What's your thought?
We have immense opportunity if we keep our eye on the prize, but that is going to mean that we're going to need to include our employees in the effort of fully taking advantage of artificial intelligence.
Mark, thank you so much. Your insights are so valued. Appreciate all that you do. I invite everyone out there to go and review and read read all the posts that are available on the Research Center. And again, Mark, thank you so much for being part of our community as a member, as a speaker, and sharing your insights.
Right back at you, Joe. Appreciate you and the Vistage Research Center. Thank you so much.
Thank you, sir. And
All right,
for all of you attending, we'll be sending a link to today's recording within 24 hours. Also, be sure to join us for our upcoming webinars on December 5th. This is a member exclusive presentation from USCC, the U.S. Chamber of Commerce, on the legislative outlook for 2026, policies, priorities, election impacts, with Tim Monahan, VP and Managing Director of Government Affairs. That will be interesting. January 23rd, I'm sorry, another member exclusive. This is from ITR Economics with Brian Bolio. We'll get the ITR view on the outlook for 2026 and early 27. That's January 23rd. Mark your calendars for that. And I want to remind you that Seth Godin on creating a lasting impact, that replay is available to watch for yourselves. That's available through November 30th. So act on that now. Look for our latest Vistage research report on digital engagement. That's going to be coming out later this month, Mark. I know you'll be interested in that. You can register for these sessions at vistage.com/webinar. That's vistage.com/webinar. Thank you, everyone. Thank you, Mark. I am Joe Galvin, Chief Research Officer for Vistage, and I wish you the best in your journey forward.